Hey there folks, let's answer the burning question for all investors. How do you source A-grade investment opportunities? I'm Aaron Young.
I'm Andrew Woodward, and Investment Insight starts now.
So great to be with you as always. Welcome to Investment Insights presented by The Investor's Way, where each episode we dive into the world of wealth creation and provide practical tips on how you can actually master your money. Now in today's episode, we'll be empowering you to secure an A-grade investment property, steer clear of costly mistakes as well. Great to have you sitting next to me as always, Andrew.
Welcome back, and I'm glad to be here with you. And today we've got Moxin Reza from the Investor Partner Group talking about how to find investment grade assets. So welcome, Moxin.
Thank you, Andrew.
Great to see you here.
Thank you very much, Aaron.
So let's start off with the obvious question. What defines an investment grade property?
Well, there are three key things when you talk about investment grade property. The first and the foremost thing about an investor grade property is that you're focusing on established properties. You're focusing on established neighborhoods, established suburbs. Now, you would hear these two terms quite often. You would hear government talking about growth corridors, and then there are growth suburbs. So growth corridors are typically, suburbs where the government is bringing in infrastructure. There's still a lot of demand because, the housing is cheap, it's affordable, people want to move there. But there is immense amount of supply. There's so much development stock that is available out there. And so while the demand is there, the supply is there, which means that the growth does not come in very fast. So as an investor, your focus needs to be in growth suburbs where the demand is quite low, the demand is quite high, but the supply is quite low because you're going for established suburbs, the owner-occupier wants to live there. And that's your first crucial step of investor grade property. You need to ensure that it's an established neighborhood. The second most important thing when you think about investor grade property is, does this property sits within my strategy? Does this, ticks all the boxes of, what I am trying to achieve with my property portfolio? Is it giving me right cash flow? Is it giving me right growth? Does it help me, take me towards the passive income goals or the retirement goals? The third most important thing when you talk about investment grade properties is thinking about the high level, the mechanics of it. So when you talk about investor grade property, you're also looking at the exit strategies for investment grade. So when you buy an investment grade property, how are you going to sell? So selling is one example of an exit. You'll get hit by capital gains tax, etc., all of things. So how do you go around doing that? How do you create multiple exit strategies? Build a granny at the back, change the configuration of the house, drop the house and build 4 units. So there are multiple exit strategies available as part of investment grade property.
And thank you so much for explaining those 3 points. I'm really interested in the idea of the growth suburb because if everyone wants to be in there, how can investors get in there without overspending?
Yes, and that's always the catch-22. There's a fine line between what is the fair price for the property. The investor's mindset always is, I want to buy cheap and I want to buy it now, right?
Of course.
And so the idea is not so much about
until everyone else rocks up at the auction with the same idea.
Same idea, yeah.
100%. And so the idea is that you have to pay the fair price for the property. Okay, you don't want to buy cheap, because if you're buying cheap and no one is there buying the property, think as an investor, when you're going to sell this, there would be no one here buying this property from you. So, when you're talking about established neighborhoods, yes, there might be some premium that is attached to it because there is the best school in town, or, it's the best neighborhood and everyone wants to live there, right? Or it's very close proximity to amenities. It's okay to pay a bit of premium to enter into the suburb where you would always have, 50 or 100 people dying to enter into that property. Because think about it this way, I would rather buy a property where there are 50 people fighting for it, and I buy the property at a fair price, and those 49 people walk out, paying an extra $1,000, showing the desperation into getting into the market, and I've got $50,000 worth of growth coming out of that single suburb in a very short span of time.
So from a property investor's perspective, why is an investment grade property so important to their wealth journey?
Yeah. And when you think about investor grade property, typically, if you take a step back, all of this comes back to a sustainable and a scalable property portfolio. So adding an investor grade property to your property portfolio means that your property portfolio is transferable, it's intergenerational, it's a property portfolio that is loved by the bank, and it's the property portfolio that you can think about from a retirement perspective as well. So when you take a step back and think about what a sustainable property portfolio is, a sustainable property portfolio is the type of property portfolio that can travel through generations, that can grow on its own, that is not dependent on your income, that you can depend on for retirement, and the banks love it. An investor grade property plays a really, really important part in building that sustainable property portfolio. So you're not going around building a portfolio organically. Majority of us basically do that, barbecue conversation or a friend buying a property and you just follow pursuit, right? I call this blind following the blind, right?
Yeah. Well, speaking of the blind following the blind, I'll speak on behalf of everybody who likes to go through life making the wrong decisions. You talk about what makes a great investment grade property. Tell us what doesn't make a great investment grade property. So when we rock up to that auction because it feels accessible, we rock up to the auction because it's within our price range, we are hoping that it could become a long-term investment, as you say.
Yeah.
But what should we be looking for to avoid?
Yeah. And when you think about the red flags when it comes to investor grade properties, there's key things. One is, don't be emotions, leave the emotions out of the door as an investor, okay? Watch TV, watch Netflix for emotions, don't play with property when it comes to emotions, right?
You obviously haven't watched The Block. That's all about emotions.
And you see people going crazy, right? You see one person buying 5 properties on a block and you think that this is what an investor grade property looks like, but that's not really the case, right?
Yeah. Well, that guy put a Lamborghini up the top of his apartment, so in a tower, so we won't be taking emotional advice from him.
And he's giving them all away.
Yes, and that's what it comes down to. When you rock up to an auction, and take auction as an example, have a really fair price of understanding what is going to be walkaway price from this. Don't be emotionally attached to this. A lot of people buying properties for investment, they need to distance themselves and go down the path of the pros and cons, make that checklist and make sure that you understand this is the price that I'm happy to pay today and I'm going to walk away from this. I love those places where, you make a pre-auction offer and you walk away from it knowing that, they're not going to accept it, right? Or, you don't want to be part of this, fizzle that happens through the auction. A lot of people cannot control the nerves. Yeah, I've been to so many auctions where, people, because of the pressurized situation, end up paying an extra $50,000 or $100,000 extra because it's the environment that causes a lot of this, right? And you would hear the auctioneer saying, "Hey, pay an extra $10,000."
Well, they know what they're doing. I mean, come on, that's exactly their fault.
Pay an extra $10,000 because it's only $10 on your mortgage, right? And that's how people start thinking, right?
Yeah.
It's not $10 on your mortgage it's an extra 2 years on your savings,
Just
right?
pause there for a moment, Moxin. Andrew, I want to ask you your thoughts on this topic because obviously I love to hear from both of you about it. You agree with the idea of investment grade?
Absolutely, and to grow a portfolio, and this is something that Moxin and I have spoken about a lot, is that you're looking for that capital growth. So investment grade means these are the properties that are going to provide that investment, that capital growth, but also the rental yield that will enable you to fund that property over time.
Here's my question back to both of you, and then I'll give it back to you. We are hearing that right now there is a rental crisis and people will take any property. Obviously that won't be long term, but short term, do you think that could mean that people are maybe following that emotional thing, which is don't worry about where you get the property. If this is a 2 or 3 bedroom place, it's going to be snapped up by renters.
Yeah, so if you think about from an investor's perspective, investors always chase 3 things, right? Technically, if they will always change yields, they'll always chase yields, they'll always chase growth. And if it's an astute investor, they'll also chase what we call it as manufactured returns, those renovations, those developments, that's chunky money, right? So when you see yields going up in any suburb, okay, there is a strong indication that, the investor around the corner is waiting for these yields to go up so that they can come into the market to grab this and add it to their property portfolio, okay? Now, it can be a good thing and a bad thing as well because yields can go up or the rents can go up for majority of the reasons. Now, housing crisis, of course, is an underlying problem and, the investors basically keep coming in. But it's also that, people go down the path of a rabbit hole where they end up buying properties in single dependent economies or mining towns or, there's a single big organization that is providing jobs to the whole suburb, right? And you want to distance away from that. While the yields might be great, you know that the volatility in these areas would basically kill an investor grade, product in that.
And that, to answer your question, Moxin has just touched on a really important point. The single industry, like the mining town location where a lot of people have been caught out, chasing that great yield and capital growth until the mining business moves
Until it
out.
ends.
Correct.
That's right. And so that kind of leads me to a part of this topic that is very close to Moxin's heart, and that's data. So when someone is looking for that investment grade property, what are some of the sources of data we can use to inform that decision making process?
Yeah, and look, as a normal bystander, a lot of people default back to realestate.com or domain.com, or if you're slightly more astute, you'll have a price finder or RP Core Logic database. there are so many databases available out there, and the amount of data that is available now versus 10 years ago. Now, me being a data scientist, I love data. So I drool data and I collect a lot of this information. But there are portals available like SQM Research, RP data, Hitch Tag, Suburbs Finder, DSR data. There is so many data points available out there that helps you make what I call it as an evidence-based decision.
Are they consumer focused the way that REA is and Domain is though?
Yeah, of course. So a lot of the information that is there is basically coming in from Domain and realestate.com.
Right.
What they're doing is they're manipulating the data into a single place where you can access it a lot more easier. You can play and manipulate the data as you please, and you can play around with a lot of these.
What's the sort of data you should be looking for? What is it that you should be searching for through this data when you're trying to decide on the investment grade property?
And ultimately, when you talk about any investment class, right, the rules of economics do not change. Okay, higher demand, lower supply, the price go up, right? Any investment class, and so property is not. It does not defy the economic side of things. It's the same rules that apply. You're looking for higher demand, lower supply, fundamentally right properties, and they would grow in value, right? And me and Andrew were talking about it just yesterday that, even if you end up buying graves, they grow up in value too, right? Because, the fundamental rules of demand and supply applies to them as well. Excessive demand, lower supply, the price goes up.
Well, that's a very good investment grade property, a grave. I might be able to afford that one day, actually.
But, if you take that and, and people, take the funny side of things, but if you take that as an example and think about it, what you're doing is you're trying to identify the demand. And so there are various factors that you can look at to identify demand. There are days on markets, rental yields, vacancy rates, the price, and the typical prices going up. So you can quickly, very safely identify where that demand of the particular suburb is.
Andrew, final question?
Final question is really just one big tip that you could give, property investors looking for those investment grade assets.
That's a lot of pressure, Andrew. Just one big tip.
Look, I think one of the biggest problem that I see a lot of people make as an investor is that they think that big is good. So they'll always go for a big piece of land because they've been instilled in their mind that big means better. I use this as an example that the size of the diamond does not reflect the success of the marriage. It's the size of the land.
Well, you don't have one.
Size of the land does not dictate the success of the investment property. And so when you talk about the land size of the property due diligence, the zone matters, the overlay matters, the easement matters, the covenants matters. There's so much stuff that goes into the land. And so don't just go with the biggest parcel of land because it could have so many different problems attached to it. So take a step back, go through in a lot more detail about the property due diligence, before you're just sticking yourself with the biggest piece of land.
Moxin, thanks so much for joining us here on Ticker.
Thank you very much, Aaron. Thank you, Aaron.
Thank you.
And a quick reminder, the program is for informative purposes only. Always do your own research before making any financial decisions. To learn more about how you can master your own money, also do visit theinvestorsway.com.au. Andrew, always great to share the studio with you. Thanks for joining us.
Thanks for having me.
All right, and we'll have more Ticker right after this.
You're watching Ticker. We'll have more in just a few minutes.